Welcome to Trade Pro. In this video, I'm going to be testing the simple 200 EMA Parabolic SAR Heikin Ashi candlestick trading strategy 200 times in a row so you can see how well it performs and what to expect when trading this strategy. Now, I'm trading it on a 15-minute time frame. I'm going to be using a 2-to-1 reward to risk ratio, and this is Bitcoin that I am using as the asset. So what is the strategy? Well, I do have a video describing the strategy in more detail, but I'll quickly go over it. First of all, when price is trading above the 200 EMA, you can only take longs. When price is trading below the 200 EMA, you can only take shorts. What is a buy setup? Well, you must have a Heikin Ashi candle that is green and has no wick below it. You also must have the Parabolic SAR trading below the candle because you're going to be using this for stop loss placement. So you're going to enter on the candle close. You're going to set your stop just below that Parabolic SAR, and then you're going to aim for a 2-to-1 risk reward. So it's going to look something like this. That's the setup. It's the opposite for a sell signal. And check out the other video if you want to hear about this strategy in a little more detail or see some more examples. But I'm going to test it 200 times now. Fast forward through the tests, and you can see the full results at the end. The results are in for the Parabolic SAR Heikin Ashi 200 EMA trading strategy. After 200 total trades, there were 88 winning trades, 113 losing trades, giving it a win percentage of 43%. The most lost in a row was 14, and the most won in a row was 8. The gain on your account balance could have been 63%, assuming no fees or slippage. So, what do I think about this strategy? Well, it's profitable, so that's better than most strategies right there. But I don't like this strategy too much because 14 losses in a row is quite unfortunate. One thing, though, that I will mention is in its current form, taking every signal it gives you, that's what you get from it. But if you were to sharpen it up and give yourself a method of filtering out those 14 losing streaks when it's trading sideways and you get a ton of false signals. So during a sideways market, you do get quite a few false signals. And yeah, another thing that I could use to improve this would be using the ATR for the stop loss to give it a little bit more room. Because I noticed quite a few where it got wicked out and then price went in the direction of the trade. So using the ATR to set the stop loss, giving yourself a method of determining when you're just in a consolidation zone, sideways market, because it does not perform well in a ranging market, just like many strategies. But anyway, thanks for watching. Have a fantastic day.